Well, now let's quickly move on to our next session, which is on next decade of WealthTech, trends and technology shaping 2030. Ladies and gentlemen, as you all know, the wealth management industry is experiencing a digital revolution driven by AI, automation, and embedded finance. This session will explore AI driven hyper personalized investment strategies, automating portfolio management through real time decision making, and the rise of embedded wealth solutions in digital platform. Ladies and gentlemen, please welcome Mr. Sunil Rohokale, an industry leader in wealth management. Let's hear it a little louder for the gentleman here. Mr. Sunil Rohokale. Welcome, sir.
Good afternoon. I know this is post-lunch is little graveyard time. Uh, People would like to chat a lot, and the enthusiasm also little dips down. But whatever audience is here, I'll make justice in next 20 minutes to talk about the wealth tech part. I think in India, the technology in banking, technology in financial services has been spoken a lot. Good part of the story is that the regulator or regulators, the participants, and the customers had alignment of interest to adopt it faster. And that's where I think payments is a classic example which we saw the significant change in the payment system in this country. The second, which probably is much logical, is the lending. Who doesn't need a loan, and who doesn't need a loan faster? Correct. I think there are different customers with different needs, and I think the lending tech also has done through fintechs disruptive journey. As we progress as a country and per capita income grows up, what is going to be more relevant in future is whatever money you earn, how do you ensure that that money also works equally hard to get you a better returns, and you also create a wealth for yourself. And I think uh, some of the slides what I'm going to show surely is quite repetitive, because these are basic depository of this country, because the country being so large and the denominator of this country is such a fantastic that any product, any services, any technology, any fintech, any business model can be so exciting by looking at the denominator part of the story. But within that, how do we carve out the space is what I'm going to attempt. So I'll cover the India growth story, which you are aware, but I'll just highlight the growth trends which are relevant for wealth tech industry, because that's a fuel which actually accelerate the wealth tech part. The rise of fintechs, and I think fintechs have done, as I mentioned, terrific in payments, lending, banking, financial services, but the journey in the wealth tech, I will say, is very nascent. I haven't seen really much of disruption in the wealth tech space, but few people have already started working, and my sense is that that will help. And we'll discuss what is that wealth tech. Some misleading nomenclature also come in. The part of the wealth tech is actually at play right now, and what is that part of the play which is doing so well, which is the new generation technology companies are actually helping the capital market, uh, the investment through mutual funds, portfolio management, alternate investment funds are making it far faster, far superior, and far efficient. We'll talk about that part. And then finally, what are the wealth techs and the right to win? What is the expectation, and what is the trends in the wealth management industry which probably can be captured by the technology evolution? So we all know that if you have been part of the corporate world, Indian economy at 2 trillion, and when you looked at 24, you need to see your own bank account and you'll come to know whether you've been beneficiary of this growth. If the 4 trillion is going to be 8 trillion, I think everyone is trying to, whether it's a corporate or individual or a family office, is trying to ensure that they are fully ready for these explosion of wealth, which is going to come through the GDP per capita and the markets, which is ultimately the barometer of the country's progress as well. And hence, these numbers are not unreal. These numbers are very much real. That 8 trillion economy, $5,200 per capita, and 10 trillion of market cap of Indian capital market is something which is still we will be much smaller than many other economy. Currently, we may be third largest by market economy and the size of the market. We have a far better chances to be doing better going forward as well. So if you look at little more gist of this, in 2019 we had 24 lakh mutual fund size, has become 68 lakh crore. It's a significantly large growth. If you look at the portfolio management, alternate investment funds have actually grown up by 3x as well. 6 lakh crore has become 20 lakh crore. And the National Stock Exchange, which probably had 1.6 crore investor, trader, whatever you can call it, today there are 11 lakh individual people who come to the market and do investment or do trade. It's a significantly large number, and these all numbers look exploding in the next 5 years, 3 to 5 years. So mutual fund industry, it's today talking about 800 and odd billion US dollar. Can it be a 1 trillion US dollar? Yes. Look at the world's largest asset manager like BlackRock. They are 11 trillion US dollar AUM. And here we are talking about the whole of the mutual fund industry looking like $1 trillion. So I think the opportunity space, we are very underpenetrated. We have to reach to the last mile where wealth is getting generated. That wealth effect has to happen from the GDP growth, the per capita income growth, and that lead to people having surplus. And that financialization of savings has to start translating into some kind of money flowing into the mutual fund, portfolio management, and some direct stocks in the capital market as well. So similarly, all these numbers are really overwhelming. So if you look at 36 lakh crore of PMS and AIF, though the ticket sizes in PMS and AIF is significantly high, in PMSs you need to put 50 lakh rupees, single check. In AIF you have to put a crore rupee. But still we see the size, what we are expecting in the next 3 to 5 years is very, very encouraging. Now if you look at the population of the ultra HNIs and the masses is also quite an exciting number as well, growing at most at a 60%. These numbers are in millions, and the wealth is in billion. The sizes are, as I mentioned, they are amazingly better. The India's penetration in terms of mutual funds vis-a-vis global mutual funds is really a way to go. We are at 20% penetration percentage of GDP, and globally it is 70 to 100% is alone in mutual fund side. Right? The life insurance, same story. We have $70 per capita, world over is 360. Look at the non-life, we have $25 US per capita vis-a-vis 528 of the world at large. So an unsecured loan, there is an unsatisfied demand. We see so much, which probably, obviously need to be regulated, need to be channelized, need to be mitigated through the risk mitigants. But at the same time, there is a significant opportunity. What had happened in the world, in developed economies, is likely to happen when we start getting the per capita upward of the $5,000. And I think that's the threshold part. I grew up in a bicycle economy when the GDP per capita was $250. Maybe I can say my son, or maybe my father was a bicycle economy person, $250. I was a motorcycle economy guy with $500 per capita. Maybe my son is $1,000 per capita. And today we are talking about 2,200 per capita. I think the economy has moved from bicycle to motorcycle to car to house economy. And now what is left over is the only investments. Because the basic Maslow's hierarchy, you have reached to that stage, and now what matters to you is the investment layering so that you are covered in any economic situations, ups and downs. So I think this is all reflective of those numbers. So look at the fintechs we have, and this data is all known, so I will not spend time on this. The fintechs have really done well. They attend a scale. Also, they have seen the significant headwind as well, because when you look at fintechs, at times the regulatory changes, regulatory mindset also can be a hindrance in the journey, but at the same time, one has to balance that uh, uh, there's a growth with enough responsibility of risk management also, and the changes in the data security, and the new technology stacks which are coming up. So I think there is no doubt in anybody's mind that fintechs are going to do extremely well, and we have the same. We are the third largest technically in the world, creating these tech entrepreneurs, which is basically early stage, which are disrupting the economic opportunities. And we all know that I think it is largely driven by, as I mentioned, the partnership with regulators, the customers, and the participants, whether it's a bank, NBFCs, mutual fund, AIFs, PMSs, everybody. If you look at the first is absolutely used. First is where I think we have really gone really long on the identity layer. I think the second part is the payment layer also. To my mind, UPI has actually disrupted every part of, and made it so simple that Panwala and Chaiwala is also today UPI compliant. And I think, and he's happy to take money, and don't say that give me a cash all the time. So I think to that extent when it happens, and this is not only to the metro cities, but the tier 2, tier 3 towns also, this all thing has been, so identity layer and the payment layer has been far superior. I think the data layer, I still feel we are there, but we are not there, because it is just a journey. My sense is that we ourselves really do not know how do you create this data, and how do you use this data, and how do you protect this data, and how do you secure this data. So I think the first bill which got out, DPDP, which probably is been reviewed by people and given the feedback. Let's see what is the final version is going to look like, and what is the cost of this data cyber security and protection is going to make this data layer and the data layer, how successful the data layer. If this data layer gets successful, my sense is that we will have a next level explosion in the fintechs. Because this digital infra, apart from the country's, the physical infra and so on and so forth, I think has really taken the government, the regulators, the customers really by surprise. And I think, as you know that in Maharashtra, or maybe in India, when you get guests at home, you have normal courtesy to offer them a tea, coffee, correct? But nowadays, guests also say, Wi-Fi hai kya? So the point I'm just saying is that it's not tea, coffee, but Wi-Fi is required first, and tea, coffee part 2. So I think this is where the whole, this digital infrastructure has done the magic. So let's look at the wealth part of the journey. And these are the key trends. If you just see the wealth trend is shifting financialization. That means the erstwhile, what is wealth mean? Wealth mean you have a real estate and you have gold. Bigger the wealth, bigger the real estate, bigger is the gold. And that is where I think physical assets were very important, but those are now changed, and people are putting more into financial savings. And specifically after the demonetization, 2016, this big change has happened, and that change is actually continuing and even going to be far more. The resultant output, you see that 11 crore people are doing trading on the National Stock Exchange. 40 million customers are opening Demat account. We have 170 million, 17 crore demat account today. This all is the output of this whole financialization, because digitization and getting the one single click, the holistic holdings of your investment through NSDL statement or a CDSL statement, I think it's a journey in that direction, is my view. Uh, Client segment. So earlier we used to say the top of the pyramid has all the wealth. That's not true. The 300 million middle class, we can call them as a affluent, maybe mass affluent, HNIs, then ultra HNIs, family offices. This whole pyramid is actually getting more stronger, and the numbers are very exciting. And that's where I think the segments which are also getting created. So everybody has a reasonable size of the opportunity to solve the complexity of the wealth tech as far as the addressable market is concerned. Not only the client segments, but it is also, we always have a belief that these state capitals and the large number 2 state capital, which is tier 2, tier 3 towns, you will be surprised to see that the tier 2 and tier 3 is actually started contributing the most. If you see the mutual fund data and you see the SIP data, you will find the growth rate of UP is highest than many states. Now, it can be statistically because their size of the population is more, so you can always have the better percentages because the denominator was always low. But I'm saying the unbanked has becoming banked, and everyone in the system is actually started looking at investing. So, and investing is not commonsensical way of investing. There is a infrastructure which regulators like SEBI has created of a distribution partners. They're all regulated. And when you go to those Jumratalayas and Timbuktus, you need to have technology which actually gives the efficiency and effectiveness. So I think tier 2, tier 3 towns is a new wealth creation. Emerging client segment, I already spoken. A shift in the financialization is like given subject. People are not interested in everything. They are saying, what's in for me? I think this holistic personalization is very, very important. I think, and they are all looking at, tell me something about me and myself and how do I go about it? Because no two people can be same. Statistically, we may put them into one basket, but the reality is that they are not the same. Their risk profile is not the same. Their age group may not be same. Their goals may not be the same, and so on and so forth. So I think everybody, one thing is common, everybody wanted to make money. And everybody wanted to ensure that they are being guided well. And they are no more investing into those old instruments like recurring deposits, Indira Vikas Patra, National Savings Certificate. I'm sure some of you in this room who are Gen Zs and millennials may not even know what is he talking about. You can go back and ask your parents, maybe grandparents, they'll tell you what I mean by that, correct? Right now, maybe you will be getting the help of a very small amount of SIP through the new generation fintechs, correct? And that's where you do not know what are the other avenues which were there in the past to invest into market. Obviously, capital market was way away from a normal individual. The investing into fixed income product was much easier. So basically, all this is happening because increasing the disposable income, in rapid growth of middle class, there is a significant urbanization is happening. Somebody is coming from a tier 3, tier 4 towns and meets his friends in Mumbai and he says, oh, you don't have PMS, you don't have SIP. He says, what does this mean, correct? I think you don't have taken the stocks. I think that all is a very good excitement, but I think the biggest risk at this point in time is, do you really have somebody trusted enough who charges you optimized, whether it's a digital or physical, whether it's a bank or anybody else, is actually helping you to plan your investments, monitor your investment, and ensure that you make risk-adjusted returns. Under penetration of financial assets, we all know that today, even today, after having 75 years completion, 50% of the financial savings are in real estate, 20% are in gold, only 5% in capital market. So I think we have a significant large, and different parts of the country likes different asset classes. Northern India, you will have more real estate. Southern India, you will probably are open to allocation of assets. Western India probably will have more capital market, mutual funds, but all lines are getting blurred. People are more interested in asset allocation. People are more interested in asset manager selection. People are more interested in saying, tell me what should I do because this is what I am and I would like to have my portfolio in whatever amount I'm giving with an optimized pricing. So I think if you look at people have in wealth management, see, people tell you about their expenses very boldly, but people are very hush hush about their wealth. And hence, it is not easy to get a person speaking unless and until he has got his wealth which he would like to discuss. And obviously, he's right, because there is a issue of confidentiality, it is a issue of sharing his personal data and information, and hence, today the generative AI is playing predominant role in some of the few areas in the wealth management or wealth tech industry. And the marketing and sales is being done by lenders, done by payments. I think the mutual funds, PMSs and AIFs may be still lagging behind because the ticket sizes are very different and the customers are also of different profile altogether. But I think the sales and marketing, I think the AI engine is working very, very good. The prospecting and onboarding, again, that part of the is also been used. Product development, I must say, it's started progress, but it is not yet. Financial advice is the big question mark. I think the good quality financial advice based on your risk profile and your goal setting, I think we need to still crack the code. And I recommend the technology entrepreneurs in this room and otherwise to look at the financial planning, financial advice, creating products which are suitable to the different risk profile of the different segments of the client, whether it is a mass affluent, HNIs, ultra HNIs, and family office. I think there is a significant amount of the need out there. Customer support, again, it has been used by the banking financial services. I think is no more different. Risk and compliance is also one area where I don't think enough work has been done. So large part of the work is basically origination and servicing, and maybe partly reporting. But I think the more value add, which has to do in the product development, advice part of the story, and so on and so forth. If I have to look at the next trends which are visible to all of us, this is what exactly I said, hyper personalization on your landing page, so that even though you're dealing with a bank and you're talking about a wealth, but I don't want to know the whole bank. I don't want to know the whole company, whether it is a NBFC or whether it is a wealth management company or a portfolio management company. I would like to see what relevant to me and not necessarily all the time I want to have. So personal profiling, persona profiling is required. Personalized financial management is required. Income and expenses insight, which is very, very personal to me. And automated goal-based investing, because my goals can change, because depending on the age profile, depending on the economic cycles, the goal should be a moving target, because I don't know how many, maybe our time people used to do 3-5 year, but at the same time, nowadays, the goals are very short term. It's a fashion to say I'm a long-term investor, but you get little wavery when the markets are red, correct? So I think that's very important. Interactive dashboards, and people are happy to do interactive dashboard, but I still feel wealth tech, maybe at the bottom of the pyramid, can be digitally fully, but affluent onwards, there will be phygital. It will be physical and digital. Nobody would like to be doing the wealth, at least to start the journey with. Till that time, they get a confidence of do it yourself. And whatever the technology or fintechs are being used to personalized or persona profiling and the goal setting and the advice, till that time they see the confidence coming back, I think there will be hand-holding required. And I think that's a important part. So this is where I think is going to be, if you see, these are the people who cater wealth. There are brokers, there are domestic banks, There are foreign banks, there are boutique wealth managers, there are full service firms, and there are digital this thing. So I think the most important here is that who is going to be the using the wealth tech first is no surprise. The dotted box is basically the box which is going to be more important here, where the opportunity lies. The depth of advice offering is going to differentiate hands down anything what you do, because I think everybody does onboarding, everybody does servicing, everybody does reporting, everybody does, but product and advice is going to be very important. So if you have to just summarize, the roadmap is going to be hyper personalization services with heightened engagement. Let's understand the difference. In payment and in lending is a transaction. Wealth is not a transaction. Wealth is an engagement product. So engagement through hyper personalization is one of the basic starting point for wealth tech. The second part is it is not a transaction, as I mentioned. It is basically a solution to your ambition, solution to your wealth. The third part is, as I mentioned again, it is not going to be fully physical. It is impossible because the costs are very high. It cannot be fully digital. It would be physical is the way I sense it. And expand the geography to cater all those geographies where you have seen, and then harness the cutting edge technology for the to amplify the operating efficiencies, and strategic partnership between the creators and the technology platforms probably we'll see it in future. So I know 20 minutes, it's like quite a marathon to complete such a large industry, but thank you very much for everybody to give me this opportunity for this 20-minute talk.
So much, sir.